folks, just doing an update on gold. Gold's trapped in the middle of the distribution at the moment. It's pulled up at daily closing resistance, which was around the 1255 zone. It also corresponded with this confluence of multiple time frame midpoint resistance. So last quarter's midpoint was there at 1254.8. That stopped the market dead in its tracks the other day, and then we've got this level up here at 1267. So gold does have a bunch of levels above it that are making it difficult for it to go up. One of the other key indications is this study here, which tracks the participation of all time frames. Typically, when you put in a major high, which is a bit like we did here, then you need to see a full participation across most time frames. So there are some warnings on gold. It does have work to go higher. Now, if we just analyze this one step at a time, first of all, we'll add on our time rotation study. So just bear with me. Here it is here. Okay, and to that, I'm just going to add the daily time frame, which is green. So all the colors color coded at the time. So daily's green, yellow's weekly, pink's monthly, and brown up here is quarterly, and orange is annual. You know, when we look at a weekly chart, you can see it a little bit more clearly. So we've got falling monthly resistance, but rising quarterly rising quarterly support. So it is a tricky place for gold. Longer term, we do think it's going higher because it's got rising yearly support and rising semi-annual support. So if we zoom back in now, to the upside, resistance is here at 1269. But coming back into the daily time frame, we've got resistance right here at 1256. It's still trapping the market. And above, as I said, we've got this quarterly midpoint and the last month's midpoint just acting as a weight. And not only as a weight, but this is a falling weight because we've got falling monthly resistance. So, you know, despite the fact that we've got this weekly buy here, it's put in a bit of a rally. It is, you know, really does have to get on with it. And I'm not surprised we're in the middle of the distribution now because we've got the Federal Open Markets Committee meeting. So gold will be volatile. And the levels to really watch out at the end of the week are this 1284 level. So that's the value high of the 3-year distribution, and then 1232 on the downside, which is the value low of this 3-year volume distribution. So that's defining wings of the distribution, if you like. So not a good place to be trading right in the middle of the distribution. You always want to be trying to pick off support and pick off resistance. Better rather than taking trades in the middle. So if I look at the composition of the trades down the bottom, so this study here tracks uptrends across different time frames. So if I look into this box, it's got 60-minute, 120-minute, 240, 480, and daily. And then underneath this is just the same study. It accumulates up when there's a downtrend or different downtrends across time. So right now, there's not much in the way of downtrends. There's a 60-minute and 120-minute count of 1, but when I look at the uptrend box, there's a 480 count of 5 and a 240 count of 3. So at the moment, the uptrends are dominating, but we are against daily resistance. Next thing we're going to do is take away the closing resistance studies and add in our range relativity study. See if we can get any insights into that. I'm just going to add on the weekly level as well. So what can we see? Well, we've got the weekly bullish up there at 1266.6, and it's in confluence with the yearly bullish there at 1264.5. So there is a bit of a confluence of resistance just up here. So far we haven't been able to get near this 1266 point. It does coincide with last month's midpoint there at 1267, so there is a fair bit of weight above. Importantly as well, you've got this volume profile resistance zone at 1268. So everything's saying it's pretty hard work for gold right here. It has hit a pretty high count in the participation time. But the other sort of worrying factor for me is that, like last week, we did close down here under this old low. Typically, you won't see that in a bullish market. It should have made a higher low than this one and then be going up. But so to me, it's I'm on guard for a move lower, it would seem at the moment. But look, you know, when the FOMC is speaking, it's a bit hard to see, you know, ahead of time what they're going to say in relation to interest rates, and all sorts of crazy things can happen on the Federal Open Markets Committee. So we don't like trading volatility, and we don't like trading in the middle of the distribution. So I hope that helps. We'll update you tomorrow.